Later. Hi, good afternoon, everybody. My name is Monica Copeland. I'd like to welcome you all to Inclusiv's annual Native American Heritage Month webinar. We're so pleased that you could join us today. We're very excited about the next hour that we have in store for you. Again, this is our annual webinar that we've been hosting for the past 3 years. And so it's been really wonderful to lift up Native American financial services, financial institutions, and particularly Native American credit unions. So I'm going to talk you through today's agenda, and then I'll introduce my guests today. So for today's agenda, I just wanted to note that we will have several slides being shared. And so one thing is that, you're currently muted as attendees, and so this webinar is in listen-only mode, but you can use the Q&A feature and the chat if you have any questions as you're listening, or if you need any follow-up information or links. We will be communicating through the chat and Q&A, and you will receive the recording and slides after today's session. Our primary, the first half of the webinar, we'll be getting an overview from the Federal Reserve Bank of Minneapolis' Center for Indian Country Development, or CICD. We have a special guest from that organization, and so we're really excited to hear the resources that are available from that end, the resources and research. We also have 2 credit union spotlights. So we're going to be featuring the Otoe-Missouria Federal Credit Union, which is based in Oklahoma, and then Clearwater Credit Union in Montana. So we're so pleased they could join us. I'm going to share specifically our guests today. Our presenters include John Morso. He's a senior policy analyst at the Federal Reserve Bank of Minneapolis, Center for Indian Country Development. And again, we're really honored that all 3 of these individuals could join us. Leilani Harpole, President and CEO of the Otoe-Missouria Federal Credit Union, and Maria Balandra, Vice President of Community Partnerships at Clearwater Credit Union. So I'm going to pause here, and I'm going to switch slides to get to John's slides, but we're going to start with an overview from CICD. So, John?
Great. Thank you, Monica. Great to be here. Great to be with everyone. Celebrating Native American Heritage Month, and I'd like to thank Inclusiv for the opportunity for the Federal Reserve to present today. So, as Monica mentioned, I'm John Morris. I'm a senior policy analyst here at the Center for Indian Country Development, housed at the Federal Reserve Bank of Minneapolis. We'll be walking through some of our. I'll first walk you through what is CICD? Who are we? Right? Many of you may or may not be familiar with us. And the center and the work that we do. So I'll briefly introduce that and then walk through some of our research. And then I've included the researchers on this slide that have produced much of the research towards the end of the presentation. So if you have any questions, I'm not a researcher that worked on these particular studies. So if you have questions about the very minutia of the research, feel free to email me or you can contact me. I have my information at the end of the slideshow, and I can respond to any more technical inquiries. So next slide. I have to say that the views expressed here are mine, not necessarily those of the Federal Reserve Bank of Minneapolis or the Federal Reserve System. Just general disclaimer. So as I mentioned, the presentation, we're going to review, try to go over very quickly because I know everyone's eager to really talk to the people on the ground doing the work. For the credit unions, as am I. So I'm going to try to get through some of these slides fairly quickly so we can get to their experience. But in that, we're going to, like I said, talk about the center. We're going to review some of the data tools that we have that may be helpful in your work, just to let you know we have them and where they're at. Discuss some early research with regard to access to capital in Indian country that inspired some more recent research when it comes to how Native CDFIs are really impacting Indian country and lending. And our work, for the most part, is focused on Native CDFIs, not so much particularly than credit unions, although we know that credit unions are a subset of Native CDFIs. And I'm looking forward to hearing to the other panelists later talk about their work specific to credit unions. So, and then we'll have questions. Next slide. So here's CICD. Our general mission is to advance the economic self-determination and prosperity of Native nations through providing data and research. There's been a big data gap in Indian country. There are issues with data collection and just a dearth of research that the center is trying to fill these research and data gaps. And if you don't have good research and good data, it's very difficult to make solid policy decisions. And so we try to inform the policy discourse when it comes to finance and economic development within Indian country. And that's our goal. So our primary research areas focus on taxing, enterprise diversification, business and capital, access to capital, financing tax credits as a part of that, and then like economic infrastructure information about, specifically some recent research on like broadband and, just bridges and regular like roads and things, projects of that nature that help facilitate economic development. And so those are kind of our 5 main areas that we try to focus on at the center. Next slide. So our data initiative, as I mentioned, we're trying to fill the data gaps in Indian country, and that has led us to develop some pretty cool data tools based on some publicly available data and other data sources. And they're all on the right. I'll run through these really quick, but we have the Native American Financial Institution map, and that has like all the Native CDFIs. We've been able to map them in the country. It's been featured, I believe, on previous Inclusiv webinars. We have the Native American Funding and Finance Atlas. We're going to highlight these two because I think these are most important to your work. That one is very interesting. We're not going to walk through all the features in this webinar because there's a lot. I just recommend that everybody go and check that one out. We'll explain why in a couple more slides, but it's really cool on how different spaces within Indian country are eligible for various federal programs or different tax credits. Then we have the Native American Labor Market Dashboard. If you want information about labor statistics in Indian country, that's a good source. And then we have reservation profiles. If you have questions or you're working in a particular community or reservation, you would go there. We're updating that one. And then we have a forthcoming Native Entity Enterprise data set that talks about, that will have information about Native enterprises and business development. So I guess if you have a potential partner, you could use that when it comes out. So stay on the lookout and look out for updates. So where to find today's resources, you would go click on our website, you'd go under data and resources, click that little plus button, and then you'd see the page that has pretty much what I just demonstrated to you, and that's how you find it. Next slide, please. So the first one we're going to talk about, or just introduce you to, is the NAFI, the Native American Financial Institutions map. It has just a map of all the Native CDFIs. So if you're a Native CDFI, you may be featured, or you're on this map, and it just shows the distribution of them that you may need for your work. Next slide. So here's an example. Here's the map. You look at it, and you can filter by different types and the work that they do. If you're looking for loan funds, or like if for whatever reason you do a certain type of work and you need a Native CDFI in your area to refer someone to, you could use this map. There's some credit unions featured here. Hawaii looks to have a few. Montana, South Dakota, right? And so you can see the different types on this map. So if that may be of use to you, just want to let you know it's there, it's available. Next slide, please. The other data too that we have is the Native American Funding and Finance Atlas. It's much more involved. There are several different filter opportunities for this. You can access new market tax credit areas, CRA related material like eligibility or lands that are available for different programs, just opportunity zones, various housing programs. It's a lot. So if you go in there and filter, you can really dive deep into if you're looking for eligibility for specific programs in Indian country, reservations, tribal lands. You can filter that for very minute detail. It's updated annually, so so it's a great resource for those areas. Next slide. And here's what it looks like on the website. You'll have to so on the location, you would select location which you're looking for. Normally would walk through a full demonstration, but I don't want to take too much time with this because you could probably play around with it on your own time, and it's very interesting. But you'd select a location. If you just want to see reservations or you want to see a particular reservation, you click on location, and on the left, you go to new map. And then in each one of those different areas, there are drop-down menus on the right that get into much more detail about the various programs under those much more broad headings. And you can really dive deep into where different programs are being offered. And that may be beneficial to you all as you allocate funding in Indian country. So I recommend you all just go there and utilize it and see if there's any value that you can find. So now that we've, and next slide, please. Thank you. So after introducing our data tools, we'll transition to the our research agenda. Like, what does CICD do, or what's our goals when it comes to Native CDFI research? And we're really trying to document lending operations and study how borrower and loan characteristics within Indian country predict loan performance, and what are Native CDFIs doing to influence better loan performance and better serve their customers and their clients and potential borrowers, and how are they contributing to the community. And so these are the areas that we're trying to focus, and really that's the inspiration of like what's guiding our research when it comes to Native CDFIs. Next slide, please. So here's some early research on Native CDFIs that inspired some subsequent research, and it'll become apparent like why I'm highlighting these next three studies as to why they're included into how they influence subsequent research. So first paper, 2015, Consumer Credit on American Indian Reservations. This one really was one of the early studies that looked at like credit scores for American Indians, or like for credit scores and populations with American Indians, and if being on reservation or off reservation impacts like your credit score or your access to credit, really. So they used like Equifax consumer credit information, consumer credit panel, and came up with they did some statistical analyses and found that those people that are living, their hypothesis, what if you were living on a reservation, that you would have a lower credit score versus off reservation. What they really found was, although that is not necessarily the case with American Indians, it really just depended on the concentration of where American Indians were living, which could be on or off or near reservation, was the primary indicator of credit score impact. And they found that people that were living in high populations of Native American areas did receive lower credit scores and had lower, just generally less credit files. And so they just studied the gaps in credit usage versus on and off reservation, and how they varied across states. And there's some variation among states, but really it came down to the density of tribal population. So, I mean, I guess that's the takeaway for that one, is densely populated Native American areas had lower credit scores on average than non-Native people. Next slide, please. So this study in 2018 discussed or looked into credit card use, and it looked into people who were applying for first-time credit cards, and it looked at the credit card access to those credit card, like initial credit card limits, and they were seeing if there were any impact between credit card limits and credit card like application or like issuances that impacted American Indians more than like non-Indians. And so there were a higher percentage as the previous study mentioned. This one really confirmed that it was the density of Native American population, not so much reservation location, that impacted access to credit. And so those people that were living in higher percentage of American Indian like neighborhoods had reduced credit card access through lower initial limits when they did receive a credit card than compared to non-Indians and in the area, or in areas that did not have high populations of Native Americans living there. But granted, their credit history did affect the significant did have significant effects on credit, like their available credit limits that they did receive, which is unsurprising, but also then it's like, well, kind of like the previous study, tribal members within highly populated, highly densely Indian populations had lower credit limits, and like that is affecting their access to credit through first-time credit users and these credit limits. And that's the takeaway there. So we'll move on to the next slide. And then more recently in 2022, there was a study that the Center for Indian Country Development was involved in that just found there was that the presence of a native CDFI within one of these areas that had a higher density population of American Indians had a positive effect on residents' credit scores. Just like their existence, like their presence was beneficial to people living in the area, and in a way that traditional financial institutions were not beneficial. If there was a non-native CDFI or non-native financial institution, there was no significant impact with regard to the community, with regard to credit scores or their credit worthiness. But the presence of a native CDFI was associated with higher credit scores and beneficial to communities. And we were, wondering why is that? And the hypothesis was that, Native American or native CDFIs have more cultural competency, and they're more connected to the community. And so there are ways that they're engaging with the community that increases their credit scores, that is beneficial to the community in ways that non-traditional, or the ways that traditional financial institutions are not. And that is, it's interesting based on the two previous studies. And so with those three studies are influenced, okay, well, let's look into this. The center should really research what are the reasons why native CDFIs are how are they serving the community better? What are they actually doing that's different? And so that's what the most recent research that we're going to dive into very quickly here touches on. So next slide, please. And so this is a recent study, 2022, fairly after the previous study, that talks about what are they doing? And so native CDFIs have an incentive, like every financial institution, right, to reduce loan delinquency, reduce bad debt, and to just minimize that. What's the best way to go about that? So it's what are they doing? How does this interact? And so native CDFIs are doing something different than a traditional financial institution to better assess credit outcomes, and then therefore make better loans to people and have a higher percentage of chance to reduce loan delinquency and bad debt. And at traditional financial institutions use traditional metrics, credit metrics like credit scores, household income, demographic information. They're on that table. And in addition to that, I just want to stress, in addition, not in place of, native CDFIs have been using more innovative credit measures of character scores, client engagement, and commitment to business assessments in ways that are more community-based than traditional financial institutions to make these credit assessments for natives in the area. Next slide, please. And so here's just a brief overcap of what is character-based lending, if you're familiar with it or if you're not familiar with it. It's really just a way of assessing someone beyond those traditional metrics, and that recognizing that disadvantaged borrowers may not have had the opportunity to demonstrate financial preparedness, and that this is a measure of relying on community reputation, and the relationship with the CDFI may be a better way to to better engage client interaction and ability to service their debt. So 4 bands and many of the Native CDFIs in this study used client engagement as a metric, but 4 bands really did a particular Native CDFI had a slightly more innovative character-based lending metrics that we're going to discuss here later on. But the variety of factors that go into this, if they have support networks, if there was a relationship with the CDFI, reputation, things that we mentioned, just overall financial literacy, personal stability, metrics that are more qualitative that aren't necessarily reflected in the traditional metrics. So next slide, please. So here's a summary of the study. What they found was that, conventional measures are sometimes effective when it comes to loan performance, which is unsurprising, or else people wouldn't continue to implement them. Credit score is negatively associated with delinquency. All loan categories with a 100% increase in credit score reduces the probability of delinquency by 7%. That's what they found. Household income is negatively associated with delinquency. These, fairly unsurprising. But what's more interesting is that the unconventional measures are also sometimes effective, right? So when you use unconventional measures like character-based lending, engagement assessments in conjunction with traditional metrics, you have better credit assessment outcomes. And so in the business context is what 4 bands really uses was when they were giving out business loans, they assessed the character of the person, and like a character score that they were relying on is was much more predictive, could have been a better predictor than just a traditional credit score when it comes to a business loan. And so how they were assessing these potential borrowers, if they were very tied to the community and they were really, they had good reputation and just good interaction, there's much more predictive loan performance, and they were more associated with servicing their debt. So, and then when it comes to engagement, clients that were somewhat engaged are less likely to have delinquent loans than unengaged clients. That makes some sense. More engaged clients may be more likely to have larger loans too, so it's more risk, and so they may be more, definitely engaged to make sure they pay back this debt. But there was really no evidence of a relationship between commitment to business and like the way they measured commitment to business is different than their character score. And they said that way that they were committed to business and under the study is not necessarily associated with delinquency in the same way that their character assessment was associated with lower delinquency. And Native CDFIs are really in a good position to implement these unconventional models because many of them are staffed by community members. They're in the community. They're more familiar with tribal dynamics and people in ways that they're better suited to do this. And we recognize that non-native or traditional financial institutions that are less connected to the community may not be in as good a position to make these assessments. And if you do character-based lending, that's rests more on qualitative assessments, and you're not as connected, that opens the door for more potential for discrimination in ways that we have not yet seen from Native CDFIs. So I just want to put that out there, saying that although this is great, the center is not necessarily recommending that everybody do this just because there are potentials for abuse. But Native CDFIs are in a really strong place for that. Next slide, please. I'll move through this kind of quickly because we're running a little short, but really it just came down to a study on how does client counseling and loan performance, how do those two variables interact. Many Native CDFIs, many financial institutions offer financial assistance, or not financial assistance, financial education to potential borrowers, and just understanding how is that effective? Is financial education effective? How does that impact potential borrowers? How they repay their loans, and so that's what the study mentioned. Next slide. So the next, so the Native CDFIs, many of them were providing, all this is voluntary. You had if you were a client, you volunteered for financial counseling. They offered group counseling, and then they offered individual counseling, group counseling focused on like basic financial literacy skills, and then individuals counseling focused more on like individual aspects of financial life, like budgeting. So really more individual, specific to that individual versus just general financial literacy concepts that were available in the group education. And the time period ranged from short counseling sessions to much longer. And we found that if you had at least a half hour of counseling, then that was really effective. And so you were more likely to volunteer for counseling if you had a credit score versus without a credit score. We think that's because the people with a credit score are much more likely to take out larger loans, and so they're more incentive to have financial counseling to make sure they can better service that debt. But 17% of borrowers did volunteer without a credit score at all. And we'll talk about the results in the next slide. Next slide, please. This is the last slide to kind of recap about the presentation, but the financial education piece specifically. So counseling, they found, was associated with a reduction in the prospect of bad debt, debt that is deemed uncollectible and is written off, but only when the borrower has a thin credit file. So it was of the 17 people that volunteered without a credit score were ones that saw the most impact for financial counseling. And then also the intensity of exposure to counseling matters. You need at least a half hour at a time. That seemed to be the threshold for it to be effective. And personalized counseling was more effective than the group trainings that they offered. But it showed that if you have a thin credit file, if you take financial counseling and you do it in a fairly robust manner, it can have an impact, and it can make a difference on how you repay your debt and your just overall financial performance and your credit score over time. So, and those are some graphs that I've included about the research. So I've also linked in the PowerPoint to all of the studies if you want to go read them for yourselves. And that's it. I hope I've been able to try to keep on time, and I'm looking forward to hearing from people on the ground who are actually dealing with customers and may or may not be implementing what we've particularly studied, but I'm sure they engage with their customers in a very meaningful, interesting way. So thank you. And then the next couple slides have my contact information and just like a QR code to the center.
So thank you, John. I just really appreciate you giving us that walkthrough with the data tools, but then also the examples from 2015, 2018, 2022. That was really wonderful, high-level overview. And I love that there's the full reports if people want more. Thank you so much. What I will say for the people listening on the call, if you do have questions that were coming up for you as John was talking, feel free to use the Q&A or the chat. But we are going to turn to our next speaker, who is Leilani Harpole. So Leilani, I'm going to stop sharing here, and then if you want to share yours. But thank you, John. A good overview. Great information.
Thank you, Monica. Let me find my document. Okay. Can everyone see that?
Okay. Yes, I can see it. But if you want to do the full slide?
Yeah. There we go. Okay. Okay, so yes, I'm with Otoe-Missouria Federal Credit Union. We've been open for just over 4 years. We received the charter March in 2019, but we didn't open our doors until August of 2019. I myself, I've been in the credit union industry for 28 years, but I have to say that these last few years here have been unlike the other years. I've worked at other financial institutions, but I feel that it's been the most impactful and quite rewarding. So we really do feel that we make a difference here. So the purpose in establishing what I've been asked to do is kind of spend a few minutes just to talk about our experience of the credit union. And so, it all comes down to what the tribal leaders wanted. They wanted to be able to improve, the financial situation or betterment of individual tribal members. So they had that vision. They decided, of course, they wanted to establish a credit union. They had considered both banks and credit unions, and fortunately chose credit unions. They do have some short-term and long-term goals. Obviously, they want to provide financial education, provide financial opportunities that many of our current tribal members did not have and now do. And of course, they have some other long-term goals, which is going to be much, much further down the road. Eventually, and again, this is many millions of dollars away, many years away, but, to be able to offer some kind of an equity or mortgage loan. And then, of course, to keep everything in the family. Our hope is that one day we will be able to do, loans for the tribal businesses for Otoe-Missouria. I won't go through the entire chartering process, but I did kind of want to share this one story. So as I stated, we received the charter March of 2019, but we really weren't able to say anything or go public with it until the NCUA made the announcement. And as you can see on the screen on the left, it's former chairman of the NCUA, Rodney Hood. He was in charge at the time, and he was so kind, and he wanted to come down and actually congratulate us and, present the charter personally for us, which was absolutely wonderful. And they came down in May, so we kind of had to be quiet from March till May, but other people seem to have found out. Regardless, when they did come down, we put an event together, and I invited, obviously every CEO in Oklahoma, credit union CEO, and it was a day of some, oh my goodness, incredible storms. So unfortunately, because of the storms, Mr. Hood, he came, about 45 minutes late, but he finally got here. And then during, the entire presentation, lights were flickering, things like that. And we even had to take cover. Fortunately, he had just left, but we had to take cover because of a tornado. But needless to say, that is one event that, Chairman Hood will never forget. And I'm sure if you ever listen to him talk about, credit unions or Native credit unions, and he might bring up that story is what I'm told. So anyway, it was quite eventful, but it was a privilege to meet him, and he was such a nice gentleman. If you'll see on the right, that is the chairman of the tribe, Mr. John Shotton. And he, of course, oh my goodness, he has been so wonderful, and he is so supportive, him and the other tribal members, and of course, the entities for Otoe-Missouria that, they really help us with anything that we need. And so I appreciate their vision, and it's just a privilege to work with them. And of course, in this picture, just next to me is Lori Gaither, and she was instrumental in helping us as well in getting the charter together, all the resources, all the policies, things like that. So it took a village. It took a village to bring it to fruition, but we did, and it was kind of eventful. There were some long spans in between, but yes, I'm definitely, proud to have, got this across the finish line and opened the doors, but yeah. I won't really go over, obviously we opened our doors August. Oh yes, we opened our doors August of 2019, and, getting contracts together, things like that. And just a few months later, boom, we're hit with COVID. And so one thing I will say, as far as our credit union is concerned, when it comes to, having a pandemic or, horrible situation like that, it was fortunate for us that it happened very early on in the credit union, so we didn't have to have a lot of the challenges that many other credit unions had to face, because, our impacts, were, we had to modify our hours. Absenteeism was an issue because, my staff got ill, and, they'd be gone for, weeks at a time. And there were even a few times where I was the only one here. But we got through it. And of course, unfortunately, many of our members were no longer working. And so because our loan portfolio was small, we didn't have that huge an impact when it came to having to do any kind of modified loans or things like that. So I really felt for, for everyone. And, but anyway, I'm glad that's behind us now. Some of the lessons learned in this experience. So again, before I came, to the Otoe-Missouria community, I thought I had an understanding as to what underserved meant. It turns out I was completely wrong. I did not even have a clue as to what it meant. And I have learned firsthand, and it had changed, my thinking completely. Some of the situations we had to deal with, because we were serving members, some of whom have never had a bank account. We still deal with members who don't even have a credit score. But, they would have, we guided them into getting money, having payroll deductions coming in. They would get their bank statements and they were very confused. This was quite an eye opener for me. They'd get a bank statement and they didn't understand what they were reading, some of them. And we had to explain that this is money that, that is theirs to use, it's a savings that they're building. And, and some of them thought it was a bill or something like that. And so it's really nice, to be able to explain that to them, that they actually do have money in their account. And, some of them, came and got it, but others, are letting it grow. So we're real pleased with that. As John had mentioned, low credit scores. I would have to say, let's see, I looked at this shortly, not too long ago, but, we have probably not quite, but almost 30% of, of our loans are weighted at a below 600 credit score, and probably about 10% have a no score in our loan portfolio. And so, whenever we have them into our office, that's the time where we do some one-on-one training with them. But yeah, we did not expect that. I can say I have not experienced that elsewhere. And I do see from the trend that, we are making, some strides, small, but we're going in the right direction. The other thing is the loyalty that I see. Unfortunately, in the very beginning, we had to charge off, too many loans. So we had to tighten lending practices, and I'll talk about that in a minute. But what I've also noticed is that for the loans that have been charged off, we've had more members come in after the fact and want to pay those loans back. And so, I mean, that just speaks volumes, about the community, about the members, as many of them, they actually have paid the loans off that we've had to charge off. And I can't see that, or I haven't experienced that elsewhere. So that was wonderful when that was new. And then there is hope. What we have learned is when it comes to financial education training, I've had to change my whole way of thinking. We've tried, webinars, we've tried, lunches, different things to try and attract, financial education training, but participation is almost nil. It's very, very low. And so now, my focus is how can I teach the youth within the tribal community about, good financial habits. Because I think it is a generational thing. We're going to have to start with them when they're young, because, and this was the same everywhere I've been. It's almost impossible to get people to come to, financial education training. Adults were busy, we're already set in our ways. So we do have to make an impact where our children are concerned. And so that is one area that we want to focus. So, we have made some positive impacts in the community. I mean, again, the tribe is so happy to have us. We're happy to be here, and we have been able to help so many members who would have been turned away, or who have been turned away, from other lending opportunities. So we've definitely helped members, build their credit scores, improve their credit scores. Some now have savings where they never did before. Some who have never even had a bank account, who pretty much were living on the grid, they now have bank accounts for the first time. We are able to provide some financial counseling. Again, when we have them in our office, when we have that credit report out, We talk to them one-on-one and we teach them as much as we can while we're going through the process. Another thing is we have our small dollar loans, and so technically they're credit builder loans, but it helps to move some of our members away from the payday lenders. So we're very pleased with that. And again, we don't have the highest interest rates, we don't have the lowest interest rates, but I think where our membership is concerned, we're able to provide our members, especially those with the lower credit scores, interest rates lower than they could probably get them elsewhere. And it took a while, but you know, many of our members were untrusting. They didn't know us. And so we have built very good relationships with our membership. They trust us, they listen to us, so we're really happy. And you know, and this is one way that we do contribute to the Otoe, you know, the Otoe community. And what's also nice, getting back to the financial education piece. So one of the things that has been really helpful is the tribe themselves, you know, whatever programs they have. We have financial literacy training online. And so before, you know, they can get some financial assistance or something like that, they have to actually go to our online training, financial education training, go through a couple courses, bring the certificate before they can qualify. So that's been a little bit helpful in, you know, in getting some of that financial education out there. And I think I have overstepped my time a bit, but anyway, it's been a wonderful experience. Again, this is probably working here has been kind of the highlight of my career, because I feel like we are making a bigger difference than I've had an opportunity to do so elsewhere. So thank you.
Thanks so much, Leilani. You've had a really deep experience, over 20 plus years in the credit union industry. And so this is really, thank you for sharing your experience. If you want to stop sharing yours, but people, if they have questions for you, they can type it in the Q&A, or we can ask, you know, we're going to turn to Maria now. So Maria, just wanted to have a conversation with you about your credit union experience. You also have more than 20 plus years. So could you please tell us a little bit about your work at Clearwater, particularly regarding your Indigenous strategies? I'd love to hear more about you and your credit union.
Sure. Thanks for having me. Yes, my name is Maria Valandra, and Don say I'm Cree, from the First Nation Nikanit from Saskatchewan. However, I was born and raised here in Montana. I have about 24 years of banking and community development. This is my first time working at a credit union. I've been at Clearwater Credit Union for 6 months now. And Clearwater is actually the second largest credit union in the state of Montana. They're headquartered in Missoula, Montana. And their field of membership is 20 counties in the western part of Montana. However, we have a goal to expand that field of membership across the state. We are the largest CDFI credit union in the state. And they brought me on 6 months ago to run their Indigenous strategy. So the Indigenous strategy is brand new to Clearwater. And I started in April, and right away my first work that I jumped right into is mentoring and supporting the Morningstar Federal Credit Union, which received their charter in December, I believe, of last year. And they opened their doors May 1st of 2023. So they've been open for 6 months. And so really this story is about the Morningstar and how we are mentoring them through their ground, you know, from opening from ground zero. And the Morningstar is located on the Northern Cheyenne Reservation. So I'm not sure if people are familiar with the Northern Cheyenne Reservation, but it's in the, I guess, south east corner of Montana. They're the Northern Cheyenne people. There's probably over 11,000, with half of them that live on the reservation. They sit on about over 400,000 acres is what they have, with predominantly almost like 99% of that is tribally owned, their land. And so there was a Native CDFI, just like John was talking about, that actually I co-founded back in 1999. It's called People's Partners for Community Development. And they've been around since then. Their current executive director, Sharon Small, saw a need in the community in Lame Deer and on Northern Cheyenne. Actually, this is kind of a different story because there is a financial institution in Lame Deer, and they've been there since 2000. They're part of a regional community bank. And as that bank grew and got larger and had different regulations, they just were not serving the needs of the folks at Northern Cheyenne. And so People's Partners saw that. They saw that, you know, the folks were not getting credit and they were not making loans. And so that's why the decision was to be chartered. As the story goes, it took Sharon, I think 6 years to become chartered. And it was a long process for her. But they were actually only one of 4 credit unions that were federally chartered back in 2022. Well, actually, that was just last year. They're the first Native-owned, Native-led financial institution on the Northern Cheyenne Reservation, and they're locally owned and operated.
You know, when you tell that story, it actually just gives me like chills. I think it's so powerful. I mean, it's also very interesting that they had the loan fund, but they still wanted the credit union. So do you know why they still felt, because they wanted the depository aspect? Is that what people were asking for?
Yeah, that's exactly. They also had established, there was a non-native that lived there for years and years and years. He had a grocery store, and he was actually for years would take people's money and keep it in his safe, and he acted as, you know, kind of a financial institution for them. He would put their money away for them and, you know, make them loans. And they called it courtesy cash. Well, People's Partners, the Native CDFI, ended up buying courtesy cash a few years back. So they started making, you know, these small dollar loans, maximum of $300. They were cashing checks. But it was a unsecured, you know, folks didn't have that security of having an institution to insure their accounts. And so I would say, you know, that a couple of reasons is the reason, I guess I already said, is that People's Partners felt like the folks were not getting loans. They were not getting credit from the other financial institution that was there. And then with this courtesy cash, they wanted the Northern Cheyenne people to have access to insured accounts. So with that, you know, she went down the pathway to be chartered.
So when you say you're mentoring them, what exactly are you doing? What are you providing? What is Clearwater providing? Because it might give some folks an example, like if they are in a community and there might be some interest in being a mentor to another credit union, because there are other Native credit unions across the country. And so maybe a mainstream credit union could be helpful. So what exactly are you, how are you helping them?
Yeah, so we started from day one. You know, we've made some donations to them. We've helped write policies and procedures. We actually, I'm their kind of day-to-day contact, but I lean on people in Clearwater that are in our accounting department, our operations department, our compliance department, our marketing department. You know, so we've been involved, like right now, they're looking at starting to offer debit cards. But, you know, there's a lot of policies and procedures around that. And so we're just helping them with their anti-money laundering policies, their BSA policies, and just there for to help them prepare for board meetings. You know, a lot of there's only 4 employees. There's a branch manager, there's a loan officer, and there's 2 tellers. And so with that small of a branch, you know, they're wearing many hats. And so we are just coming along right beside them and supporting them in whatever they need support, you name it.
So what are you seeing as far as any kind of challenges or barriers on the part of on the credit union side? I mean, maybe interacting with the community or just starting out new, like what are some of the bigger noteworthy observations that you've had about the challenges?
You know, I asked Sharon, the founder, you know, if she had to do it all over again, what would she do? And her answer was that she would make sure that they had more startup dollars, you know, to cover the expense of the credit union. So it's really about the funding. I also think that in a small rural community, even though there is a financial institution there, they don't have people that are experienced, you know, in a credit union, around, you know, being a branch manager, being a teller, being a loan officer. So the training, and, you know, getting the time to train, having the capacity to take on all these different roles, that's a challenge. And then just building up their equity. And that's part of what Sharon had said. She would have started, you know, maybe have done a little bit more fundraising at the beginning before they open their doors, because NCUA, as most of you probably know that are sitting on this call, you know, they have regulation around what is your maximum loan amount can be a certain percentage of what your equity is. So right now, her maximum loan amount is $2,500, and making loans, you know, if that's the maximum loan you can make, that's gonna take a few years to break even and then be profitable.
And so then I guess my last question for you is about successes and opportunities. So how has the reception been just in general, working in the Native communities, working the Cheyenne Reservation? Like, what are any good news coming out of the work with the morning?
Absolutely. I think that, again, you know, I talked to Sharon and wanted to get her input. And she said, you know, we're doing it. We're here. We have a great team. You know, they're located right on Main Street. And the cool thing is that they have their Native CDFI, People's Partner, that does offer small loans, that does, you know, do financial education. And then they have their courtesy cash as well. And they're actually all under the same roof. So, you know, they're establishing credit. They have these insured accounts. It's kind of a full financial circle, you know, that they're providing all under the same roof. And they have a great team. So there's a lot of successes for them to be proud of. You know, it's a slow start, of course. They've only been open 6 months, but they're there, they're consistent. You know, folks are, I think the last count that I saw, these would have been for September numbers, they have just over 500 accounts opened to almost 1.2 million. And they have now it's probably over 200 loans that they've made in these last 6 months. So they're going strong.
It's really impressive. Unfortunately, we are at time, but what we're going to do is we're going to try to share your contact info and the slides with everybody who's receiving the recording and who registered for this call. I just want to thank John and Leilani and Maria. Thank you so much for being here today and sharing your story. And I'm just so excited. I mean, you guys are both young credit unions in terms of Otoe-Missouria, and you survived the pandemic, which is amazing. Lonnie, love that. And then Maria, for you to help, and the Clearwater, and I think Jack Lawson for his leadership too. He's also on Inclusiv's board. But there are other Native credit unions on the rise. It's happening. Like there's interest right now, for example, in Navajo Nation to start a credit union. Standing Rock reached out in South Dakota. So you guys are not alone, and it's just so exciting to celebrate this topic during Native American Heritage Month. So thank you all for being here. Thank you all for listening, and we'll make sure you guys get the recording after. So thank you guys. Thank you to the Federal Reserve as well. Thank you, John. Have a good afternoon.
Thank you.
Thank you.